What's going on, guys, and welcome back to another video. So in today's video, I want to explain what the big news is, what Jerome Powell just said, and what the Federal Reserve's moves are going to be. This is also going to impact any stimulus. So if you have any questions whatsoever, please ask your questions down in the comment section below. But let's get into the update for today. First, according to the Federal Reserve and Jerome Powell, interest rates will stay at 0 for now. But, and again, I want to be very clear, they are already guaranteeing at least one rate increase for 2022, but many of the Fed expect at least 3 rate increases through the end of 2022. The expectation is by the end of 2022, they want to be at 0.9%. Okay, 0.9%. It's a big jump from where we are right now. But Jerome Powell also made it very clear that they will not be raising interest rates until after they are finished tapering, which is believed to be in March. And so interest rates would most likely come, they'd probably raise the rates, my guess is in March because they don't meet in April, but it would probably then start in April. So just keep that in mind. The reason why I want to bring this up, number one, if we continue to see inflation, what's going to really bring inflation back down is raising interest rates. That might not happen until April. So we got January, February, March, then April. Okay? Keep that in mind. Because if you are out there looking for a home, you want to buy a house, you might want to buy it January or February. I wouldn't wait until after April to buy it because chances are, interest rates are going to go up, prices will somewhat come down, but is it going to be so much that it makes that much of a difference? Probably not. Here's something else. The Fed is going to be reducing bond purchases by $20 billion per month. Right now, we are going to be we're printing $95 billion per month, but we are going to be bringing that down to just $75 billion per month. Now, this is what was originally expected. So these two moves, having a rate increase, or multiple increases sometime in 2022, no big deal. This is what the markets were expecting. And seeing the bond purchases go down, $15 to $20 billion was expected anyway. So the good news is, if you're an investor, it was a great day. It was a great day. Did a lot of purchasing this morning before the announcement. Did a little bit after. Things are really good. So, and if you guys want to get into investing, I'll put a link down in the description box below. You can go and sign up for an app. It's a free app. It's called Webull. You sign up with the link down below, and you will get 2 free stocks valued up to $1,850. Now, here's what I can tell you. What the Federal Reserve just did and their predictions on inflation and unemployment, these are major. As of right now, Jerome Powell believes that inflation will drop down to 2.6%, which is less than half of where we are currently at, and this is going to happen by the end of 2022. We are currently at 6.8%. Now, the new unemployment rate will be down to 3.5%. This is the expectation. Currently, we stand at 4.2. So it's not going to be, we're not going to see a huge decline in the unemployment rate, but at the same time, just that 0.7% means millions and millions of workers are going back to work. And again, 3.5% is very good. So here's what I can tell you. Right now, the Federal Reserve believes that the GDP will actually increase by 4%. Just let that sink in. We're going to see inflation drop down to 2.6. We're going to see the unemployment rate come back down to 3.5. We're also going to see GDP increase by 4%. So even though we are going to have 1, 2, or 3 rate increases in 2022, the Federal Reserve is still very much bullish on the economy because the GDP they're predicting will increase by 4%. Well, here's why this is very good news, because this is very good news moving forward. This means that they are predicting we are going to grow. as opposed to go into a recession, which is great. But this also puts other things into question. Even though this is really good news for the economy, this is really good news as an investor, as somebody that still sees millions of people, or okay, I don't want to say millions of people. Okay, I don't see millions of people, but I still understand that millions of people are struggling. There's still hundreds of thousands of people that are homeless because of the pandemic and the issues that we faced over the past almost 2 years. But even though the Federal Reserve is so bullish for 2022, this is where some things are questionable. Will we see additional stimulus from the federal government? We don't know. We honestly don't know. Do I think a stimulus check, a fourth stimulus check is going to come? No. Not from the federal government, but potentially states. Will we see the child tax credit payments get extended? As of right now, we don't know. I talked about this earlier on this week that there's talks of a potential standalone bill for the child tax credit payments. Even Senator Joe Manchin was asked today and was simply questioned whether or not it's true that he doesn't support the child tax credit payments. And he just said, that's BS, your BS. And he went on to say that he's never said that he didn't support the child tax credit payments. He does support them, but what he doesn't like is he wants a work requirement to be attached to it. Big difference. But could we see student loan forgiveness of up to $10,000 per borrower? If we see unemployment rates drop, which is expected, if we see the GDP increase by 4%, which is the projection, and if we see inflation come down, do I think we're going to see student loan forgiveness? Absolutely not. Now, I don't want to be the bearer of bad news here, but let's talk about Social Security recipients as well. Because right now, many lawmakers have been pushing for additional benefits to Social Security recipients. But let's just roll this back. What did Jerome Powell just say? That they're bullish on GDP, 4%, right? That they're going to raise interest rates maybe once, potentially 3 times. Now, just understand, if they raise interest rates 3 times, okay, they're not going to do it in January. That's way too soon. And they're going to do it after they finish their tapering, which is going to happen in March. The expectation is March. So if they finish tapering in March and they raise interest rates in April, between April and December, okay, they're going to have, what is that? I think they have 6. They meet in January, they meet in March. So yeah, between April and December, there's going to be 6 meetings that the Federal Reserve has. Out of those 6 meetings, they will raise interest rates at least twice, okay? 2 out of 6, okay? So that's, what, a 33%? 33% of the time they're going to be raising interest rates, but yet the Federal Reserve is still bullish on this. And if the Federal Reserve is bullish, and again, and Jerome Powell was even asked this, if his change in direction is simply because of the renomination from President Biden. I thought this was a great question, because this is what many people have been thinking for the past week or so, is that he changed his tune from we are going to see inflation be transitory to now he's going to retire that word. But that happened after, I believe it was right after, President Biden renominated him for the Federal Reserve chairman. But this is where things come into question is, are people on Social Security going to get any additional benefits? More Medicare? Are we going to see vision, dental, and hearing? I don't know. Will we see the $200 per month that President Biden promised? Probably not. Will we see lower prescription drug prices? This is the most likely outcome, is lower prices. Medicare, maybe hearing, but maybe nothing. But lower prices will probably be the one thing that's in there. $200 per month, I guarantee you that is not something that Democrats are looking to pass. Now, we could also see Senator Joe Manchin really hold out on passing the Build Back Better Act, which is what the expectation is at this time. Why would he do this? One reason why is he could actually wait to see if inflation does go down. Even though that's the projections, a projection can be wrong. A projection can go in the opposite direction. So even though the Federal Reserve is projecting that interest rates are going to, or inflation is going to drop, doesn't mean it has to. Doesn't mean that's a rule and that's what's going to happen. because there's so many other things that tie into this. The Omicron variant could definitely play a factor. But Senator Joe Manchin could also wait because he could be very optimistic about the projected path of the economy. And if he feels very optimistic and bullish of the economy, he could think that, you know what, $1.75 trillion is just too much. It's too much money. We do not need to pass that. We cannot afford to pass it, and so he would vote against it. So here's what I can tell you. This report that came out today, the dot plot, the Federal Reserve's minutes, their statements, right, from Federal Reserve Chairman Jerome Powell. This is extremely important because this doesn't just impact the economy, doesn't just impact stocks and traders and investments and stuff like that. It was a great day, but at the same time, it also plays into what we see passing out of the Senate and out of the House. But what I can tell you right now is this isn't over. This is not over. Even though the end of the year should go fairly well, there's nothing really imminent that's going to come up outside of any additional COVID news. But what I can tell you is this is going to play a role. My best guess, my expectation is Senator Joe Manchin is going to take this time to think and reevaluate where he stands. Do I think a vote happens this week? No. Do I think lawmakers could potentially push a vote maybe over the weekend or next week? Yes, I do think they could. But will they? Probably not. So that's what we know right now regarding any additional stimulus, what Senator Joe Manchin is saying, what Federal Reserve Chairman Jerome Powell just said, and what the Federal Reserve's next moves are. So if you have any questions whatsoever, please ask your questions down in the comment section below. Again, thank you guys for watching. Have a wonderful rest of your day, and I'll see you guys on the next one.